Do you have some Bitcoin that you want to hold forever? And do you hate taxes? Come talk to me. We really believe in Bitcoin. We believe in a Bitcoin economy, and we think a lot of people do too. And we think there's no better way to protect your loved ones long term than Bitcoin life insurance.
All right, guys, bang, bang. I've got Zac here with me. Zac, I thought a great place to start the conversation is you guys are building the first Bitcoin denominated, Bitcoin oriented life insurance policy. And there's all these advantages when you introduce Bitcoin into it. I think the Bitcoin community is going to be super excited about this and really want to leverage the benefit of having Bitcoin life insurance. But before we do that, we got to understand what life insurance is. So how does traditional life insurance before Satoshi gets involved? How does it work? And why would somebody want life insurance?
Yeah. Well, actually, life insurance is like the oldest savings product in the world. So the original life insurance product is, you're a sailor in Venice and you don't know whether your ship's going to go down or not. So all the sailors get together and they all pay a little bit of premium for protection, and then if the ship goes down, their family was able to bury them appropriately. So that sort of burial insurance was the sort of original life insurance product. But it evolves. It's a super interesting. I actually joke that 19th century life insurance is a lot like crypto is today. It was sort of the Wild West. People were walking around selling people life insurance and tenements in New York City. Some companies went belly up. Turns out they're Ponzi schemes. Some companies are really successful. They still exist today, 150 years later. But fundamentally, life insurance, like all insurance, is about risk sharing. So I don't know when I'm going to die, just a fundamental fact of life. And Pomp, you don't know, and the listener doesn't know. And actually, I'm in my late 30s. I'm very unlikely to die this year. But there is a possibility I could. And when you take enough people together, enough 38-year-old healthy men and women, when you get to thousands of people, you can actually say, well, it's statistically likely that 2 or 3 of these people are going to die, but you don't know who those 2 or 3 people are going to be. So, you get 1,000 people together, you all pay $100. Only 3 of you are going to die. Those, you don't know who they are. Those 3 people die. Now, you have $300,000 split amongst 3 people who die. Now, those 3 people's family gets $100,000 a piece. So that's the original concept of life insurance. Then what happens over time is that the governments around the world think it's good for people to have protection. It's good for people. And in some cases, like car insurance, they force you to have insurance, right? So we all have to have car insurance. We don't all have to have homeowners insurance, but your mortgage provider insists that you have homeowners insurance. And in the life insurance space, what that ends up meaning is that over the years, the US government, but also basically every government in the world that has taxes, gives tax advantages to life insurance products because they want people to be incented to appropriately insure themselves. So that ends up being the 2 big benefits of normal life insurance. Is you have this protection. So I don't know when I'm going to die. It could be today, it could be in 10 years. So we can share together that risk. And I get protected. And the second thing is, because protection is considered a good thing, there are tax advantages to life insurance and to annuities. I'll pause there. I don't want to give a 30-minute lesson on life insurance. So hopefully that gives you a good sense.
Here's what becomes interesting, right? So we have this life insurance thing. It's got this really long history as to why people want to have it. Obviously, it continues to work today. And so it's kind of like a sound structure, if you will. What are the risks that are introduced in life insurance, either for the people who are paying in the premiums or for the companies that are issuing the life insurance, when we have kind of fiat money backing it, right? So how do you identify, okay, why would I even want to have Bitcoin involved in this process whatsoever? And how do we improve the old system, if you will?
Well, I'm going to sound like every Bitcoiner in the world, which is that, fiat currencies, I think, are inherently unstable. They're inherently inflationary. So, you buy a policy today and you're going to get $1 million in protection or whatever. That particularly for the product we have, which is called Whole Life. Whole Life lasts your whole life. It's very well named. I think when you're making that sort of commitment to your loved ones that's supposed to last 20, 30, 40, 50 years, fiat currency on a purchasing power basis is going to probably be worth a lot less. It's inherently unstable. I think the easiest way to think about this, actually, if you don't want to get too political on the United States, is we see our ultimate vision as there were 57 countries in the world last year that had inflation rates over 10%. And if you're in Argentina and you're middle class or upper middle class and you want to buy insurance, clearly life insurance that could last 30 years, the idea of doing it in Argentinian pesos seems crazy, right? Because that currency has failed multiple times in the last 30 years. So the idea that you put your life insurance policy in Argentinian pesos is just sort of, doesn't make any sense. And so this idea of a, permissionless, decentralized, global currency that's not backed by the state, that's appreciating in purchasing power over time, particularly, I think, over 10 years, 20 years, 30 years. I think that's really powerful for people all over the world.
Now, once you introduce Bitcoin into this, if I go and I search on Google, it says, meanwhile, is a Bitcoin life insurance company or a fund. The press coverage, all this stuff is like Bitcoin life insurance. How does Bitcoin get introduced into this?
Yeah. Well, one of the things we realized is there isn't just inherent instability, if you mix fiat currencies and Bitcoin together. So what we set out to do is to make a company that is entirely in Bitcoin. So we have this subsidiary in Bermuda. Let me pause and say Bermuda is a legitimate place to put life insurance companies. It's not the Bahamas, which is where FTX was. If you ever go there, 70% of the economy of Bermuda is the insurance business. You walk around, it's like Munich Re, Chubb, Swiss Re, all these big companies are based there. It's a very unusual place. And what's nice about Bermuda is that they're serious financial regulators. They have respect from both the US regulators and the European regulators. But they're also willing to do innovative things. They've sort of created this whole industry there by being a little bit innovative. So what we did is we created a company in Bermuda, and it is on the Bitcoin standard. I think we're the only company in the world this is true. So we state our financials in Bitcoin. We do all our regulatory filings in Bitcoin. We do our solvency and capital calculations, which are basically the nuts and bolts of insurance. And then people pay us their premiums in Bitcoin, and we make promises. Those are the eventual claims in Bitcoin. So what's nice about this, because everything's in Bitcoin, because truly for us, one Bitcoin is one Bitcoin, it doesn't matter what I like to call the exchange rate of Bitcoin is today or last month or a month from now, or even 10 years from now, because you as a user pay your premiums in Bitcoin and we make promises in Bitcoin. So that all matches. So I think that's what we mean when we say Bitcoin life insurance, is that everything about it is in Bitcoin, and that takes away this big risk. Now, there's another, maybe you'll
go ahead.
I was gonna say there's another perspective, which is well, what does that mean for the user? Why do I give a shit that it's in Bitcoin? And from the user's perspective, I think we're back to really the two fundamental things, again, protection, and that there's tax advantages because of that protection. So our product is called Whole Life. It lasts your whole life. And because you will eventually die, again, I'm not the bearer of bad news there, then you're going to eventually get a payout. So our product works you might pay one Bitcoin a year for 10 years. We can do smaller policies. We can do bigger policies. But let's say, just to make the math simple, it's one Bitcoin a year for 10 years. And then from the moment you pay your first premium, we promise you some fixed amount of Bitcoin, 13 or 15 or 17. It depends on your age and your sex and whether you smoke and how healthy you are and stuff. But and that's actually the entire thing is you're giving us one a year for 10 years. We promise you 15. That's what the contract says. So that's the protection, right? You drop dead, you get by a bus, your kids, your wife, your husband, whomever, your niece and nephew, they get the 15. But again, the other benefit is because governments have put tax benefits around life insurance, what you get is, in addition to the protection, we're turning that 10 into 15 by we can talk about that, how we do that. But if you could do the same thing, you would be paying interest income tax, maybe capital gains when you like trade in and out of different things. We don't pay any tax, like there's no taxes on that stuff that happens to like churn 10 into 15. And then the third, and again, this is just true of whole life in the United States for everyone, which is that you can borrow out of the policies tax-free. And what's cool about that in the case of Bitcoin is if Bitcoin went up to 700,000 or 7 million, you could borrow back one of the Bitcoin you put in and you wouldn't owe any capital gains tax between 70,000 and 700,000. So what I like to just say is like, hey, if you're hodling some of your Bitcoin, literally you're like thinking about intergenerational wealth transfer and like, this is a great place to do it. And then particularly if you have a big stack, but even if you have a little stack, if you ever do need that liquidity, then the policy is actually a great place to do it because you won't owe capital gains tax.
So how much of life insurance is actually not about the life insurance, but it is taxes and like intergenerational wealth transfer? Like how, and whether that's in the kind of fiat world or in this Bitcoin world, like, put me in the shoes of somebody who is buying life insurance policies. What are they thinking about? Is it just, hey, I want people to have money when I die, or are these other things more dominant in that decision making?
Yeah, I think it really depends on how rich you are and sort of where you are in that spectrum. So I'll actually take myself. Like I have some term life. It's called term life because it lasts a certain term. So it might be like 20 years. That's whole life lasts your whole life. Term life lasts 20 years or some term. And the reason I have term life is, I have some mortgages, and if I drop dead, and the ratios tend to be very high because you're very unlikely to die in the next 20 years if you're younger. So I have that to protect literally my family and my wife in the sense that they could pay off the mortgages. Like that's how I thought about how much term life to have. I have my Bitcoin life insurance policy from my company. Happy to say I put basically all my Bitcoin into a life insurance policy. I'm eating my own dog food in that sense. That's more of an like intergenerational investment. And what you'll see for a lot of people is as you make a little bit, like you have like real protection when you're, like normal middle class. You might start to have some of these investment products, but then, when you get, I don't know, have $10 million in net worth, it flips and definitely becomes about estate planning, tax planning. There's all sorts of other styles of policies that aren't worth getting into here, where they're like investment accounts, but they can be bigger, and all this crazy stuff that people have figured out. So I'd say a lot of big policies are definitely for tax planning. And then everything in between. We actually, we don't have an annuity product yet, but you could think of an annuity as the inverse of life insurance. So life insurance is about what happens to your family if you die before you're supposed to. An annuity in some ways is what happens to your family if you live longer than you're supposed to, right? It's supposed to like keep giving you like monthly income for the rest of your life. And those are basically like, they're like 401ks in that they compound tax-free. So often if you've maxed out your IRA, your 401k, then like next thing you should buy is an annuity. There's always this protection element, but definitely as your finances become a little more complicated, life insurance is increasingly used for tax and estate planning.
Talk to me about custody, about regulation, like all the things that go into having a regulated product that obviously is using Bitcoin, not dollars. And I'm sure there's tons of considerations there. So like, what are the things that you had to do that maybe other people don't have to do? And then how are you solving or mitigating some of those risks? Today's episode is brought to you by Core Scientific. They are one of the largest public Bitcoin mining companies and hosting solutions in North America. They specialize in transforming energy into high-value compute with exceptional efficiency at scale, and recently announced a contract with CoreWeave, a leader in AI cloud compute, to provide up to 16 megawatts of data center capacity. With a substantial fleet of their own miners, Core Scientific not only earns Bitcoin for their own account, but also provides hosting services for large-scale Bitcoin mining customers, operating out of 7 data centers in Georgia, Kentucky, North Carolina, North Dakota, and Texas. You can learn more about Core Scientific by visiting corescientific.com. That's corescientific.com. Go check them out today.
Yeah. Well, let me just start with regulation. We are a fully fledged operational life insurance company, and we have an actuarial consultant, we have an approved actuary, we have an internal auditor, we have an external auditor, we have this cornucopia of service providers, and then we spent all of 2022 putting together a business plan, and then all of 2023 operationalizing that business plan, and we just started selling policies basically the very end of last year, the start of this year. And what does that mean? It means I have an independent board in Bermuda that has a former audit partner from a Big Four and a life actuary. And so we have these independent board directors. We have a enterprise risk management framework. We have all these policies and controls and key risk indicator. And then we have to do all the actuarial math. We have to figure out what are called reserves, which is every time you pay a premium, we have to put a certain amount of it aside. We have to reserve that to pay future claims. We have to post capital. We have to put our own Bitcoin up to support any variations and any of these risks that we're talking about. So there's just this huge amount of work, and we built all this technology from scratch, and that's a big that itself is a huge thing. And then on custody, we for all our American clients, we use Anchorage. We self custody. We just think that actually can make sense, but I don't know if you're familiar with Anchorage Digital. Basically, every 6 of the 8 people who work for the company have to biometrically approve with an independent iPhone any movements of Bitcoin, and we really believe they're super secure. But I think what you're touching on is, I just gave a whole speech about a whole long narrative about all the life insurance and insurance stuff, but then we have all this crypto stuff, and that ends up being Anchorage. We have to do Chainalysis. We have a lot of extra, not really from the user's perspective, but from our perspective, like AML, anti-money laundering, anti-terrorist financing. I'm afraid to say, I'm sure some of your listeners won't like this, we do have to KYC you if we're going to write life insurance for you. So anyway, there's all that infrastructure, and really that's protection for the users. We have a lot of oversight, again, independent board, the regulator. I literally have a conversation with our regulator every month. And I think when we started this company, we sat down and we said, and it was counterintuitive in January 2022, we think that the value in crypto is going to come from people who can deal with all the regulation. That doesn't mean that all the regulation is fair. It doesn't mean that particularly the SEC is doing things that I love. But I think if you're going to build a financial institution that people are going to trust, and particularly one that we're asking them to trust us for 10, 20, 30, 40 years, we went through all the work I just talked about.
Now, when we start to think about how this plays out over a long period of time, life insurance naturally is a long period of time, right? Like I might buy it in my 30s or 40s, and it may not actually kind of come to fruition until my 60s, 70s, 80s. So how do you think about internally, like succession planning? How do you think about,
Yeah.
kind of the continuity of an organization, of technology? Like the longer the timeline, the more complex maybe some of that stuff gets. And right now I feel like you're starting out building the foundation. And so I'm sure that there's decisions you're making where you're like, hey, this is not something where we want to be successful for a year. We need to be successful here for decades to come. And so how does that
Yes.
change some
Yeah.
of the design decisions or technologies that you're using?
Well, let me answer that two different ways. Just like culturally, I actually talk a lot about long-termism being a value that we have. And partially that means everything I just said, like we go through all this regulatory rigmarole. But you're absolutely right. Like day to day, I the only way I mean, let me put it selfishly. I want to build a big business because I will be successful if we build a big business. And the way that this business does not end up big is actually for us making stupid short-term mistakes. Like, we try to get yield. We get yield on Bitcoin. That's part of like turning 10 into 15. We're super careful. And I know, BlockFi, Genesis, like they all say they had an investment committee and we have an investment committee. We have an investment policy and an underwriting manual and the credit manual, blah, blah. But literally, actually, like we had a meeting last Friday and we just rejected every investment opportunity that the team brought to us because for my co-founder and I in particular, the only way this company isn't going to work is if we do something stupid like that. And insurance companies make promises for the long term, but then they also like compound over time. And the longer we exist, the bigger we'll be. And we just think it's inevitable that there's a Bitcoin economy. We think it's inevitable that that Bitcoin economy will have big financial institutions. And we think it's inevitable that one of those financial institutions will be a life insurer. So I think that's super important culturally. On a technology perspective, yeah, don't tell some of my VCs this, but like, yeah, we're deliberately slower on some things than we could be if we were willing to do different things. So like we built a policy administration system that had like auditability as like a first order concern so that we can see whenever anyone views any data, we're logging it. Anytime any data is changed, we're logging it in sort of an append only basis. Anytime, we deviate from an underwriting standard, we're keeping track of it. And sometimes actually, a user will find, a UI bug and then we don't fix it in 5 minutes. It takes 5 hours. You know what I mean? Just like a little bit longer than it should for a technology company. But that's because exactly to your point, we made all of these technological and design decisions. We store data about our users that we may just not need to have for 50 more years. And that just creates like a completely different dynamic of like, you can't just like throw it in S3. Like we have to think about like, how is that stored for the long term? How do we make sure that people in our company even like can't just randomly access it? So I think you're absolutely right. And last thing I'll say is just fundamentally, I get invited on not really podcast, but like shows and stuff, and people are like, what's going to happen to the price of Bitcoin tomorrow or next month? And what I say is, I specifically built a company that's making the bet that Bitcoin will be worth more in 10 years or 20 years or 30 years, because I have no idea if Bitcoin is going to be more in 10 days or 20 days or 30 days. That's just not what I'm good at. Like, I think if I was good at the other thing, I'd probably be doing that. That's you can make a lot of money much faster. But I think for my co-founder and I, we're very much in this mode of we believe in this thing of Bitcoin and the Bitcoin standard and the Bitcoin economy. And we're making like a lifetime bet on that. And we think our users should too.
That makes a lot of sense to me. Then Talk a little bit about the investors that you raised money from. You, if I remember correctly, Sam Altman, Lockie Groom, like some very well-known, very good
Yeah.
investors. What are they betting on? Are they betting on you and your team? Are they betting on Bitcoin? Is it like life insurance? You know, what's kind of the
Yeah.
thesis you think from there?
I don't think, particularly the two folks you mentioned, I don't think they're animated by life insurance. And actually, like, they're not huge crypto investors. We do have some great crypto, like Stillmarks invested. I don't know if you know them. They're a Bitcoin firm. We also have like Gradient, which is Google's AI fund. You know, fundamentally, actually, if we rewound all the way to like pretty early in our conversation, when I mentioned like what we talk about is like we want to build the world's largest life insurance company. That just sounds crazy, maybe, but that's our ambition. Our ambition is, again, 57 countries in the world with inflation rates over 10%. Much of the world is underinsured from a protection basis, you know, even putting aside the tax benefits. So we want to build a full suite of life insurance products that are denominated in Bitcoin. And we think that makes a lot of sense for anyone in the world who thinks there's inflation risk or regime risk or currency risk. And that we're the only ones right now who can do it. We're the only ones who can do Bitcoin in life insurance land, and we're the only life insurer in Bitcoin land. And those two things combined, we believe, and I think we've convinced a few people, some good investors believe, is like a once in a lifetime opportunity to build a giant global, you know, important financial institution. Because all of the life insurers that you've ever heard of, New York Life, MetLife, Northwestern Mutual, Mass Mutual, you know, not only did they exist when my like grandparents were born, they were already 100 years old and thriving. And one of the reasons that is because it just like persists. It's the same thing over and over again. So we see Bitcoin and crypto more generally as this like generational opportunity where the world's changing. Like a new economy is being born from nothingness. And we believe that's going to be a giant global economy. And that's the pitch that I think got those people interested, not, you know, whether they're long or Bitcoin or not, or whether they believe in insurance, just the scope of like, we want to build a giant institution that impacts, you know, I like to say I want to have 1 billion users. And that's usually crazy for a financial institution, but I think that when you combine like Bitcoin and financial institution together, like it's a generational opportunity to do that.
What is the biggest thing that keeps you up at night right now? So you're building this thing. It's super exciting. I think it's awesome. I think a lot of people are going to think it's awesome. There's risk, right? But like, what's the thing that keeps you awake at night that you're like, we have to, you know, kill this, or we have to get this right?
Yeah. I mean, the thing that keeps me up at night is honestly, look, I think as a founder, I live and CEO, you like live in these two different worlds all the time. And one is like this long-term visionary world that I just talked about, which is like, I really believe that we have built something unique and important. And I look out 10 years and I think we're going to be huge. On the other hand, my day-to-day is, talking, literally I talk to me or one of my colleagues talks to every single potential user. We're explaining life insurance to them. It's a big decision about like literally sending us Bitcoin, which is like, you know, obviously very uncomfortable for a lot of people. And, you know, we're really successful in that, but it takes time. You know, you have to fill out a life insurance application. Like no one wants to sit down and tell us whether they have cancer or not, but like you have to do that, right? Like just get through the process. So I think what keeps me up at night is like these day-to-day things. Like, you know, we spend a little too much money on that whole cornucopia of service providers I said, and I'd like. Every individual user wants to have like one extra phone call about you know, some element of the policy, and it's all fine and great, but I'm definitely like in the day-to-day of building a business and getting more users and like paying the bills and stuff. That's what keeps me up at night.
That makes a ton of sense.
Visually, I wake up and then I work more. So I'm like, well, like, oh, I woke up at 3. Like, well, this is 3 extra hours of work before my kids wake up.
All right. Where can we send people to find you on the internet? Where can we send them to find more information about the company? And then leave us with kind of, the 30 seconds on if somebody's interested in life insurance and Bitcoin, why you guys potentially could be a good option for them.
Perfect. So we're available at meanwhile.bm, but also meanwhile.com redirects there. I think our Twitter handle is Meanwhile Life. I'm Z Townsend on Twitter. And so that's the way to find us, meanwhile.com. The simple pitch I usually make is, do you have some Bitcoin that you want to hold forever? And do you hate taxes? Come talk to me. I mean, that's, and do you, but I think more fundamentally, like what I've said, I guess in short summary, we really believe in Bitcoin. We believe in a Bitcoin economy, and we think a lot of people do too. And we think there's no better way to protect your loved ones long term than Bitcoin life insurance. And we would love to talk to you about the nitty gritty details.
That's a pretty strong pitch there, Zach. Thank you so much for doing this. We'll definitely do it again in the future.
Great. Thanks, Pomp.